Thank you very much for staying. Welcome back. Now to a very fair story. And some players in the financial sector continue to express concern about recapitalization in the banking industry and how it is likely to lead to the collapse of many Ghanaian-owned banks. The CEO of IFS Financial Services, Kojo Oheniche, is the latest to add his voice. Charles Aite has the rest of the story.
The Bank of Ghana has set December 2018 as the deadline for banks to recapitalize up to at least 400 million cedis. The Chief Executive Officer of IFS Financial Services Limited, Kojo Oheniche, however, believes Ghanaian banks are likely to be the hardest hit.
By 2007, the minimum capital for banks was 7 million cedis. So today we are pushing it to 400 million. 7 million to 400 over a period of 10 years is really significant, and it creates a sense of pressure and instability, especially on indigenous businesses.
The CEO of IFS Financial Services Limited was speaking to Joy Business at a Thanksgiving ceremony to mark the company's 10th anniversary, where he outlined some targets by the company in 2018.
It's been exciting, obviously. We've enjoyed the opportunity of living our mission of growing people, growing businesses. We've helped businesses to grow. We've helped individuals to manage their finances well. And we believe we've contributed significantly to the economic development of our country. We've given lots of job opportunities to young people, young graduates, and we receive applications every time to do even more. And we are grateful to God for that. But obviously, as you would know from the industry, there are challenges within the industry as well, but we've managed it well, and we are happy with where we are today.
Away from that, Ghana Mine Workers Union is urging government to revive plans by the previous administration to establish a secondary jewelry industry in the country to support local gold miners. According to the union, Ghana can add value to the gold it produces as a way of creating more opportunities to the youth in various mining communities. The previous administration initiated plans to build a gold processing company in Ghana to move away from the export of raw gold, which has been criticized by industry watchers. General Secretary of the union, Prince William Ankra, made the suggestion in an interview with Joy Business.
The hub where you can get all the jewelry shops here and there. Takwa could have one, the regional capital, because this is a gold nation. So it creates a buffer industry, in other words, secondary industry for the gold mining industry, where we have skill set from the University of Science and Technology, because they do all these sort of competencies there, and also the middle range competencies here and there. And it's still to also allow people who want to do SMEs by getting several vendors and that kind of stuff here and there. So it's a whole great opportunity to make sure that we expand beyond the raw gold that we really send out there to go and sell. And that go alongside with all those the issue about the gold refinery. I mean, it's also created many other sort of openings for our nation, So in effect, we'll mine for many years, 100 years beyond. It's beyond a century, and we can't just do it in the old school way. So it's important that we begin to draw this issue up. In fact, the Mahama administration did mention in his second term how they intend approaching that in the sort of World Economic Forum in Doha. And we support the call that, look, whilst he's back, we're going to actualize it by getting a law passed that a fraction of the gold produced will stay here. Unfortunately, it didn't first allowed. But look, this nation cannot keep wasting time. Especially in time, save now, upload, it become urgent and imperative. And that's where we're coming from.
Now, some of the major infrastructure projects outlined in the 2017 budget are now set to take off from next year. This follows the announcement by the Vice President, Dr. Mahamudu Bawumia, that another key project, the One Village, One Dam, would commence soon. There's more in the following report.
The One Village, One Dam is the second major economic program that the Vice President has indicated will start from next month and is aimed at supporting this administration's proposed economic transformation of the country. The first, which was announced last week, is the disbursement of the $1 million for every constituency, which would start from next year. This is aimed at supporting infrastructure projects at the local level. According to the Vice President, it is also aimed at supporting the growth of the agricultural sector.
Of course, in the 3 northern regions, we also have the One Village, One Dam project. And again, this One Village, One Dam project is one that, you have to start virtually now, because the rainy seasons is coming to an end. And this is really the time to start the construction of the dams. And so we should be moving very quickly with the development authorities to try as quickly as possible to begin those particular projects. For a large extent, it's really a caterpillar and bulldozer matter in putting these dams together.
Some analysts is that looking at the funds allocated for capital projects in the 2018 budget, would it be enough to aid the completion of these projects?
You're live on the marketplace. Let's now move into the petroleum industry. And the National Petroleum Authority, NPA, is assuring the general public that prices of petroleum products at the pumps are expected to remain stable over the pricing window of 16th December to the 31st of December 2017. According to the NPA, this is as a result of a marginal drop of fuel prices on the world market, as well as the exchange rate, which has also remained relatively stable. Now, additionally, the NPA says, in line with a directive from the Ministry of Energy, it has also activated the price stabilization mechanism to avoid any upward adjustment in prices. The authority has therefore adjusted the price stabilization and recovery levy PSRL on diesel and LPG. The adjustment will not result in any price increment. The authority assures the general public that it will be monitoring the prices to ensure consumers benefit from government's decision to use the PSRL to manage the variations at the pumps. Meanwhile, the Institute of Energy Security, IES, has projected fuel prices at the pump will not experience any significant change due to the fairly stable prices of both crude oil and refined products on the global oil market, coupled with a marginal dip of the cedi's value against the US dollar. The IES also says it expects fuel prices to fall slightly due to the reduction of the price stabilization and recovery levy, and should oil marketing companies seek to reward fuel consumers during the Yuletide. Now, Principal Researcher Richmond Roxon has just joined me in the studio to do some analysis on the current factors considered and the current pricing window, and what will be the real situation before the Yuletide. You're welcome, sir, and this is the marketplace.
Thank you very much.
Now, first tell me, you are predicting prices to remain fairly stable,
yes,
but we witnessed a week or so ago that the cedi really depreciated slightly. Now, why this particular prediction?
Good afternoon to your cherished viewers. When you do the analysis, you're supposed to take an average of the value. You're not supposed to take a day or two or a week's value. So yes, you're right that in the last week the cedi has been depreciating, but when you do the average, you realize that that's over the 14-day period. You realize that the cedi depreciated by 3 pesos as compared to the previous average of 4.48. Currently it's around 4.51. So it's not as bad as it looks. That is if you take the daily figures, but if you take the average figures, it's better than before. Like we mentioned in the statement, crude oil prices also went up, although marginally, but it was still within the $63 range, so it's not going to have any impact. For finished products, for gasoline and gas oil, for gasoline it also went up slightly, although insignificant. For gas oil it also went down by 0.02%. Right. So we're not expecting any change in price.
I believe you've been monitoring the prices currently at the pumps, and how much is petrol, for instance?
Yes, currently petrol is in an average of 4.46, where some OMCs are selling at 4.49, others are also doing 4.43. The cheapest on the market as we speak in the country is by Zen Petroleum. Zen Petroleum is selling around 4 cedis, 37 pesos for petrol. The most expensive, shockingly, comes from the major oil companies. Goil is doing 4.49, Total is doing 4.49. Shell, that's Vivo Energy, is also doing 4.49. Normally you find the smaller OMCs rather selling at the higher price, but in the last 3 windows you realize that it's rather the major OMCs who are doing the highest of prices on the market.
Now, the announcement by the national regulator NPA seems to come as some good news for consumers, but don't you think that we could experience a wider margin of decline in prices, especially with this PSRL now activated?
Yeah, it's amazing the MPA comes out to make this announcement, because over the period you realize that the MPA doesn't make announcements when it comes to fuel prices, whether it's going to be stable, whether it's going to be same, whether it's going to go up. They don't make any announcement. So we find it interesting and intriguing that in this particular window, the MPA decided to come out. Looking at the price stabilization and recovery levy, it was 10 pesos on diesel, 10 pesos on LPG, and 12 pesos on petrol. What the MPA or what the government has done is that they have revised it from 10 pesos to 3 pesos. That means 7 pesos cut, and they are going to use that to stabilize prices. That is what the price stabilization and recovery levy is for, actually, to stabilize prices when prices are going to go up. So if you look at our statement, we said that we're expecting prices to remain fairly stable, and that even if we're going to have any impact, we're not going to see any difference more than 1%. That is if OMCs are going to apply the price stabilization and recovery levy. In the MPA statement, are
they not bound to apply them?
In the MPA statement, they make mention that they are applying it, but it's not having any impact. In the first window, we didn't have any change in price. In the first window, it was still 4.49, and it's still maintained. What this is happening is that this means is that rather than consumers benefiting from the price stabilization and recovery levy cuts by government, it's rather going to BDCs and OMCs. They are rather benefiting, because over the period they are saying that they've made losses and that they've maintained prices because of competition. So if government has given that respite, they are rather taking it instead of making it go to the consumer, and that is where our problem
Do you as an institution feel that we drifting towards the era of subsidies again, which did not augur well for the economy?
No, we are not drifting into the era of subsidies. When you look at the Energy Sector Levies Act, the government deliberately introduced price stabilization and recovery levy to stabilize prices when prices are going up, to stabilize premix and RFO, and also to for under recoveries. So you are using what the fund was meant for to do. That is exactly what government is doing.
Yeah, but over the years, there's this school of thought. Sorry to cut you. There's this school of thought which believes that these recoveries should have rather gone into stocks, piling up of stocks or security or strategic stocks to be able to cushion the impact of consumers in times like these.
Yes, that's also a good school, because there are many ways of managing prices, many ways. One of the ways that you can manage prices is to increase your storage facility. At the end of the day, if you have a good oil trader who understands the market, what the person can do for you is that the person studies the market. The person can advise you that in the next 3 months you're expecting prices to go up, or in the next 3 months you're expecting prices to go down. So depending on the industry analysis you do, you'll be able to buy stock to keep. At the end of the day, when prices go up, you release those stocks as strategic stocks because you bought them at lower pricing. That's exactly one of the ways to manage it.
But is that not the reason why BOST was created?
Exactly.
BOST is not really living up to expectations.
That's the truth of the matter. Because in the last time we checked, we were supposed to have 12 weeks of strategic reserves. I don't think we have 12 weeks of strategic reserves. If today we have issues in the country, we're not going to get 12 weeks from BOST. You will have some private BDCs having stock. But BOST as an institution, we don't think that they have plans. They're saying that plans are far advanced to create more tank farms. It's always been talk shop, and we expect the margins that they make 3 pesos margin, BOST margin on every liter of petrol you buy. And if they make judicious use of that money, definitely we should be able to expand the stock level that we have.
So what are we expecting, or what should we expect right after the Yuletide? Because now we're being covered by the PSRL plus these factors which are favoring price reduction or stability. What should we expect
in the next week? What you're expecting is that once the stabilization fund goes away, the reality will set in, because the OMCs will not be swallowing the 1%, 2% increase. So definitely, if we still continue this way, by January we'll be paying more, and that is what government is trying to avoid. When you look at the Ministry of Energy statement, they stated clearly that they are doing this for 3 months. They're going to be doing this for a period of when they're going to be spending around 30 million every month. So if the reality sets in, if we move away from the price stabilization, definitely we'll see prices going up.
All right, so earlier we heard ACEP, the African Center for Energy Policy, really questioning whether the claims by government is true, and I would like us to take a listen to the Executive Director, Ben Wachi, who currently is questioning the government's claim of using proceeds from the stabilization levy to cushion prices of petroleum products.
The price stabilization levy was put on petroleum products to ensure that when prices are going up, government could have some buffer or some money set aside to bring it back onto the market so that you can hold the petroleum prices over a period of time. And that is where you estimate that the rise in price wouldn't be for the long term. So you can hold it over a period, and then when the price stabilizes, you can actually take it out. Our argument all the time, all this while has been that you can't accumulate enough money to manipulate petroleum prices on the international market. And therefore the stabilization levy was not really relevant. And it has been justified over the period that the money that has been accumulated over the period are actually not enough to stabilize the petroleum product prices. So essentially what they do with that money is to stabilize the premix fuel for the fisher folks. And we're now seeing how people are corrupting that money, because the more premix they consume, the more subsidy they demand. And when they demand that from the price stabilization levy, there is nothing left for stabilizing petroleum and petrol and diesel prices.
All right, so that was Ben Boachi, he's Executive Director of the Africa Center for Energy Policy. Now, Richmond, currently the MPA's directive is covering only diesel and LPG. Why not petrol?
It's interesting. It's interesting because majority of Ghanaians consume gasoline, and if you're going to have any directive or any subsidies in quote, you're going to support prices, definitely you should be looking at gasoline as well. But government only looked at LPG and diesel, which looks as if the target was for industries instead of domestic use, and we don't think that is fair to the average Ghanaian, because the number of people who use petrol are relatively more, even though sometimes you have diesel consumption being up because of industries.
All right. Okay, thank you very much. But don't go away yet. There's another brewing story in Nigeria, a neighboring country, also an oil producer. And one of Nigeria's largest oil unions has launched a nationwide strike today, Monday, over the laying off of its workers. Reports say the Petroleum and Natural Gas Senior Staff Association of Nigeria, PENGASAN, whose members mainly work in the upstream oil industry, started the industrial action after talks with government agencies ended in a deadlock. Experts say the move could hit the country's crude oil production and dent exports, as was the case in December 2016 during industrial actions by the union against ExxonMobil. Nigeria is Africa's largest crude exporter, and oil sales make up to 2/3 of government's revenue. Reports say PENGASAN is on industrial action as a result of unfair labor practices by some companies, particularly indigenous oil and gas companies. Nigeria's crude production has fluctuated over the last 2 years due to militant attacks, pipeline theft, and industrial actions. All right, so I was coming to you on this before you quickly go. Now, we are dependent on Nigeria in one way or the other for some oil imports. Now, how is this particular situation going to affect us here?
We mainly import from Europe. We don't import from Nigeria unless we have emergencies. Normally, we look at the south, that's the Northern African region or Europe for our oils. That's how come basically we use Brent to do the calculations, not WTI, depending on where you import from. This definitely will have an impact on Nigeria because Nigeria mainly depends on oil revenues. And like you mentioned, this upstream, so definitely it's going to affect the production that they're going to have in a day, and definitely what they're going to export and the revenues that they're going to make. But if definitely they refine some of their crude on the local market, definitely will affect their local market. That means it gives us opportunity to even export, like we did last year. When they were hard pressed, they had to depend on us to export some cargoes to them. So yes, it's going to affect
we do make some significant imports of gas, LPG, through the WAPCO, West African Gas Pipeline.
Yes, that is, you know, the WAPCO system is different when it comes to the power sector. It's not the same as the petroleum sector where you supply fuel for us to buy. So what is the impact it can have on us is the supplies from the West African Gas Pipeline. But over the period, we haven't really been dependent on the West African Gas Pipeline. We mainly depend on Etoabo for some time now, even though they are prepared to supply us any amounts that we want.
All All right. So we shouldn't expect so much change.
We shouldn't expect so much change. If it's going to have any change, any impact, definitely will be the power sector. And during this season, nobody is expecting doom. So I'm sure that enough arrangement has been made. But I hope that very soon the governments of Nigeria will deal with the issues because definitely it's going to affect them. Already they are supposed to cap their production because of OPEC agreement that they are going to go into production cuts. So definitely it's an issue that they must deal with. But one quick one, back to the price stabilization, the fund. We have a challenge in the way even government is applying the fund. Basically, we have a challenge with it because one is that it's a levy, 10 pesos levy on each litre. So government looks as if it has reduced it from 10 to 3. If you're going to do that reduction, definitely you're supposed to go to Parliament.
So are you signing with ASEP, questioning the claims that indeed
truth is that, like I mentioned, the consumer is not benefiting. If the end game is for the consumer and the consumer is not benefiting, how do you say you're applying it? Because in the last 2 windows where you've applied it, you haven't seen even a peso reduction. So how are you applying the fund? It is going to the BDCs and the OMCs and not the consumer.
All right, thank you very much, Richmond Roxton. And that was a principal researcher of the Institute of Energy Security, IS, Richmond Roxton, will be discussing various issues in the downstream petroleum sector and also a brewing incident in Nigeria where the largest oil and gas union is currently embarking on a strike. Now, away from that, telecom giant MTN is to provide 15,000 households with affordable internet services. Currently, internet penetration in Ghana stands at less than 40%, with high cost and low speed being some major challenges. But General Manager of MTN Business, Samuel Addo, says MTN is aiming at smart community where every household in the country has access to fast, reliable and affordable internet service. He was speaking to Joy Business at the launch of the MTN Fiber Broadband.
Demands of internet on fixed locations are usually quite higher than on mobile. The internet that goes through your phone, your tablet, is a bit lower than if you needed to power, say, your TV or to power the security cameras in your home. So today we are launching our fixed broadband and telling Ghanaians that we have brought the future to Ghana.
Help us understand how, this very broadband service aims to, empower economic, activity, especially with low-income earners and, of course, households which spend less, in their expenditure.
Okay. I think that we all know that the internet is a game changer. And with internet, there are a lot of things you can do. Let me give you one example. Instead of everybody having to jump on the means of transport to come to the city, with internet, you can Skype whoever you have to engage so that you don't have to come to town to jam the roads and then everybody will spend precious time in traffic. Again, I like this example of telemedicine, where by virtue of video conferencing, you can sit in whichever part of the country, a specialist doctor in Accra, in Kumasi, or even anywhere in the world. You can have a full doctor's consultation services with him by virtue of being on that. Education, online education. You don't have to physically go to a brick and mortar room to be schooled. You can have education online and on and on. Entertainment, virtually everything. Religion. You can have church online, and indeed there are a lot of churches which are streaming today online. So the internet is the whole new world that has come to help everybody.
The communications minister in time past has stated that, telcos like yourself would have to consider internet infrastructure sharing in order to boost the competitiveness in the sector. You don't want to speak about that. Okay, finally, help us understand the cost involved in this very launch of the broadband services. How much are we talking about?
Okay, MTN has spent so far about 70 million Ghana cedis, but we understand that it is part of what we need to give Ghanaians for Ghana to move into that digital age. And so you, as the Ghanaian, to come on the service, you need as low as 20 cedis. But let me say that it depends on the consumption rates. So the more you use, if I give you an example of like electricity, if you are using just about 2 bulbs in your house, then of course you can do with about 20 cedis a month.
And on that note, we wrap up this afternoon's edition of The Marketplace. It's been exciting having you on board, and of course, we come your way with more business stories on Business Live at 5 p.m. My name is Emmanuel Abuaji Riafi. Join me again same time tomorrow for more interesting developments in the world of business. Have a good afternoon.